So I I we purchased. We had Mike Strategies come in, so I had recommended the stock. That's actually how ChangeWave started. That was our first stock. So when I'm skiing in Courchevel and I turn on my laptop, remember the sound right from your AOL account, and it shows that MicroStrategy was $354 when I woke up that morning, and it was like 180 when I turned the computer on. But they had no earnings, Jay. They had very little cash. What you're talking about is not only the secular growth, but the fact that people who are leading it are sitting on trillions and trillions of cash money dollars. And so that, to me, just the analogy only goes so far here. I think we're in a different world in terms of the ability to finance data centers, the strategic reason to do it, and they all need fiber optics. They all need, my favorite Credo CRDO. I was in a data center, and one of the guys building it said, "Do you understand that Credo it requires us to have 4 miles of Credo's fiber optic stuff to be able to, get these 25 or 50 megawatt data centers up." So I'm buy the dip in tech when it gets oversold, overbought, and sell call options when it gthis above the 75 RSI, and then sell put options. And but this is not going. This spending is the big question, and I've always asked people on the show, so I'm asking you. When do you think the ROI is going to come from all these $1 trillion in data centers?
Well, I think it's already coming, and Facebook is using it not only for optimizing ads, but also for engagement. Google has transformed into an AI platform.
Yeah.
So there's tremendous revenue from that. There is productivity gains occurring, particularly in basic programming operations. So I think that it is there, and that their thesis is not going to bear out. And even if it's a little bit true in the short run, I mean, nobody was saying that in 1997, like, oh, well, and where's the return on invested capital? They were like, first to market creates the $1 trillion company. There was 4 or 5 created during that.
Yeah. Every time I think of that time, Jay, I think of JDS Uniphase. It was the all-star. I remember being at a money show, and this is like January of 2000, and I'm asking, how many people, raise your hands, how many people own JDS Uniphase, Dell, Cisco, Ciena, all the sort of the winners there, and they all owned all of them. And I said, well, you understand that at some point in time, they're going to actually have to do profit. So have you at least taken your original capital out and maybe another 100% just to be a prudent investor? And they all looked at me like I had 5 heads.
Yeah.
Why would I do that?
Of course they did.
I mean, Barbara Streisand's given stock tips on the Johnny Carson show. So so I would say a mania without cash versus a mania with trillions and trillions of cash, to your point, has a lot of legs, and that's why we're buying dips. And we are trimming when something like SMCI goes up a stupid, ridiculous amount. And I was told, by the way, Jay, that Mr. Jensen, in his meeting with Mr. Trump last week, shared with him that he'd be very happy to part with $1 billion or so of his dollars to support, the Trump library, the Trump, bridge, the Trump music, I don't know what the hell. And then shockingly, yesterday and today, he comes out and says, you know what? We're going to pull back those tariffs. And who's the biggest winner for that? NVIDIA.
Yeah. It's first I'm hearing of that story, but it could be true. Who knows?
I
I'm
got
sure
better
you have some.
connections than you do, pal, in the side
I know
of
you have
Washington.
insiders. I know, Toby, you have a lot of DC insiders inside that Beltway. That's for sure. So listen, guys, let's leave it on that block because coming up next, we're going to ask Jay about earnings season. S&P 500 forecast right now is actually very low. We want to know what his number is, though. We might even talk a little bit about Bitcoin. We know there's a procedural vote taking place in
Yeah.
Washington, and we'll get into that a
And
little
then we
bit.
got to
So with
ask
us today,
Jay. We have to ask Jay about the Fed because that's his favorite subject.
absolutely got
He
to talk
loves
about
those
the Fed.
people.
Got to talk about Powell. Will Powell be gone or not? Jay will know the answer, and he's going to tell you right after the break. So with us today is Jay Hatfield. He is the CIO at ICAP in New York City, and also Tobin Smith is with me, and we are live today on YouTube. So we appreciate all of you watching and joining in our live to tape session. So we'll be right back after the break. Please stay with us. All right, we're out. That
You
was
got all the
good.
tech
Very good.
working?
Yeah, it's working now. Yeah, we are
Okay.
good. We are
Let me
good.
do a quick man about a horse.
Okay, you're fine. So let me see here. Okay. Jay, how is everything? Did you get stuck in that rain?
A little bit, but when you're in Manhattan, you can just take Ubers everywhere, so it doesn't matter much.
That's true. Good point.
But things are going well. My son's out in the Hamptons working at a pizza joint, so we've been out there trying to keep him company. So we're having a decent summer. And our business continues to do well, so we're happy with that.
Okay, that's good. Good for you.
What
Yeah,
have you
thanks for
been up
doing
to?
this. We had a cancellation on the show today, and we had to reschedule that. I know Aaron spoke with you, so I appreciate you joining us on quick
Yeah, I
notice.
can do it on short notice as long as I don't have a conflict.
Okay. Yeah, it's awesome.
What's new
All
with
right, so
you?
we'll get. Oh, just I'm super busy. We have a lot going on. We have new shows that are coming out this fall, new distribution outlets. I mean, CrossCheck's definitely taken off, but it's requiring a great deal of time
Mhm.
at this point. So we have a lot of great new and interesting things. And Toby's show's doing great. His Money Mavericks program. So we're really pleased with that. And there's a lot happening. So I would imagine this conversation, if we hold this conversation a year from now, it's going to be a completely different situation for everyone involved with CrossCheck Media. So it should be good.
Great. How many subscribers would you say you have?
Well, we distribute, I'll give you an idea. So on the audio side, we're getting about 125,000 monthly downloads. And that's across, we have 3 separate channels right now, and they're broadcast to 14 different audio platforms around the world. And then on the video side, the numbers are well over 1 million right now, but we have multiple platforms that we're on, and we just continue to add platforms all the time. So the goal is to really see that grow at a nice healthy multiple into 2026. So we'll
And
see. I think with
it's
added
not.
shows.
I just saw my client last night who has the excuse me, streaming channel technology where, basically he pushes a button and BTV, has a streaming channel.
Yeah.
So we've got enough content now that they can just cycle into that. And, I only charge him 25 grand to raise him money. Usually I charge more. So he owes me.
Yeah, there you go. I love that. Yeah, that's the thing about it is that we do have a ton of content, and the content isn't just on with the video side of it, but then you have the audio side,
Yeah.
and then you have these video shorts, and then we took the video shorts, and then normally you have these video shorts that end up on TikTok and they're a vertical screen. We now also offer the format where they're long. You have your more of your horizontal side, and they look better, and they're spread out everywhere, and it's an endless amount of content that's provided right now. So it's pretty wild to witness that type of growth.
Yeah. I'm still running to the mailbox every day to see my stock certificates and my first big dividend, Todd. It's very hurtful.
Yeah, but don't
I'm just
actually.
busting your ass.
No. I mean, I just had FedEx mailing labels delivered yesterday. I'm waiting for the envelopes, and I could get this out to you. But yeah,
Woo!
Toby's gonna walk out with like doing really well. The second those are out, I'll send you the tracking, and then
Awesome.
hopefully we'll have them out tomorrow.
I mean, I'm looking at these core weave up 7%, SMCI 7%, Lumentum Light 6%, AMD. I mean, it's just two different worlds.
Two different worlds is right, absolutely.
And why
It's a
would
whole
you? Why would somebody be selling to these today? Um, among other things, in other words, usually when you run a portfolio, the decision is, "Hey, I'm going to replace this because I have a better idea here." Um, there's no better ideas right now. There's no better performers. There's no better cash flow. There's no better, secular demand. Yada yada.
Right. No, you're right. You're right. So let's talk about it. You guys ready?
Yes,
We
sir.
are.
Okay, all right. Countdown from 5. All right, 5, 4, 3, 2, 1. Welcome back to Buy, Hold, Sell. Well, with us today is Jay Hatfield. He is the CIO at ICAP in New York City. And Jay, I got to go with what Toby teased at the end of the last block, and that's about the Fed and Jay Powell. Do you think Mr. Powell is doing a good job, and do you think he may be too late to the game as far as his interest rate cut policy?
Well, we've been defending Powell because we don't think he's the worst Fed chairman ever. We think he's the worst Fed chair since World War II, because the worst Fed chair was a gentleman named Myers, who presided over the Great Depression.
Depression, yeah.
He shrank the money supply during the Great Depression and under Hoover. So
Toby, you probably remember him, right?
yeah, of course.
Hey, he's
So-
my granddad. Okay, don't be a jackass.
So he's clearly better than that, but not any other Fed chair. He made a horrible mistake with his transitory notion. Might have been political, talking to Yellen because they're friends. Maybe just pure lack of understanding of economics. But he doesn't think the money supply matters. But here's the data. Milton Friedman said inflation's always and everywhere a monetary phenomenon, then went on to explain, that's a direct quote, but went on to explain it's when the money supply grows faster than nominal GDP.
Yeah.
So that was proven 100% during the pandemic. Money supply grew 60, nominal GDP 38, 22% increase in the price level for over 4 years.
And too much money chasing not enough goods. I mean,
Exactly. Well, that's the dynamic.
Yeah.
They don't seem to care about. They only look at the employment market.
Yeah.
Employment market was distorted by the pandemic and government payments. So they use a delayed CPI calculation. It's 2 years delayed to try to smooth it out. But by smoothing it out, it makes the Fed 2 years behind. So we should be down to not zero as the president's advocating, or whatever, one, but at 2.75 to 3, that's 75 basis points over the inflation rate. By our statistics using real-time shelter, inflation rate is about 2 on PCE core, 1.2 on CPI core. So that's all the difference is shelter is a bigger component of CPI. So the notion we have an inflation problem is ridiculous. The monetary base shrinking at 8%. It's very dangerous, could have a deflation.
Right.
Today's data, the bond market sold off a little bit, but the key data was the core. It printed light. The implications for PCE, we'll know better tomorrow with PPI, is a 0.23 print on PCE core, annualizes at 2.4%. So there is not an inflation problem. And moreover, we're 130 basis points too high at least. Why don't you just make one cut?
Right.
Makes sense. So
Well,
they
Jay,
will pause in July and probably cut in September.
Yeah.
Because there are 2 members of the core semi-permanent board Federal Reserve Board itself, not FOMC, they are in favor of a July cut, so he needs to placate them. He doesn't want to have dissension, particularly giving all the politics. So, it does seem like the administration's trying to build a case to fire him. We would be okay with that. I'm sure the market would sell up, but that would be a buying opportunity.
Yeah. Well, Jay, you've been so deadly accurate on the Fed for so long. You are the whisperer as far as I'm concerned. But there's a couple dynamics here still that are very interesting. Number one, we do have this. How many trillion do you think the deficit's going to be in the next 24
Only
months?
1.4 trillion. That's our new estimate.
Okay, 1.4.
Yeah. So everybody's like quoting these CBO numbers, but they don't realize that's relative to this fantasy world where we let the 17 tax bill expire, not relative to current law. There's a minor cut in the tax bill, net of the extra spending on, well, really tax cut, but it's like 50 billion a year. It's not material. But the CBO does not include tariffs. So they were forecasting 1.7, but if you include tariffs, that's 1.4. It's 4.5% of GDP, which is sustainable because nominal GDP usually grows at 5. So you're going to have, if we can grow at 3, we project 3, not 2%, not 1.8 like CBO.
Yeah.
So you should have manageable deficits, particularly with the AI boom we've been talking about, and lower corporate taxes. So we should be able to grow our way out of this deficit problem, or at least keep it static at 1 times GDP for total debt. So at least grow faster than the debt grows. And so we don't buy into the sort of Armageddon. We think that's political, from Democrats just trying to criticize the Republicans and hawkish Republicans trying to criticize the bill.
Yeah, well, I mean, so the other elephant in the room, I guess here, pardon the pun, is the wave into Bitcoin somewhat driven by the deficit spending, the idea that the U.S. dollar would become less of the sovereign currency around the world. Do you buy into any of that?
Absolutely not. It's not a currency. It's illegal to have your own currency. I do think that if it's gambling, not investing.
Yeah.
Because there's no cash flow, but it's gambling with the card count in your favor if you play blackjack, because the president of the United States and his entire administration is promoting crypto tokens. They're really tokens and not currency.
Yeah.
So why don't you get behind the bandwagon until the Ponzi scheme crashes?
Yeah, I will say that
Crypto week. It's crypto week.
Crypto. Yeah, well, it is crypto week this week. So we own Ethereum because that's the backbone for all these other cryptocurrencies, and we actually we lend our Ethereum out and get paid like 14% yield, which is not too bad. But the idea that the other one that goes is stable coins. Do you have any? I assume, Jay, you're the same feeling on stable coins as you are on.
Well, they're not illegal because they're regulating them.
Yeah,
you basically have currencies sort of turn them in effect into checking accounts. So it doesn't create more currency; it's just a checking account. And I don't really see, like, for trading crypto tokens.
Yeah.
Then having a stable coin is way better than trying to do it with other trade. Just have other tokens be the intermediary.
Right. Well,
if for normal transactions, it seems like way harder. So I don't know why they would.
Well, again, if this passes, then, for instance, your Walmart, right? And what do you pay in fees to Amex and Visa and MasterCard? If you had your own stable coin, and you cut out the 75 basis points on, $5 trillion of sales, that's real money. Maybe that's the use case.
Yeah, I mean, there's a lot of actual cost to processing transactions too, so it's not going to be free.
No question. But I just thought it was just interesting. I'm totally with you. Sort of, let's just go with the sentiment, and the world is revolving around sort of Donald Trump's big ideas, small ideas, etc. And then the other one, I guess, with JJ is if if interest rates were to come down your 130 basis points, then that would have some bearing as these notes roll over, and our debt service would go down. Is that not positive?
Yes, we didn't model that in, but it would be. So we think it's all going to be positive. The Fed's going to cut at least 2 times this year. It's good for our fixed income funds.
Yeah.
They're about 20% sensitive to interest rates. So fixed income, equity, we think that not just the internet companies, but the rest of the market will participate when we get those rate cuts.
Jay, not to interrupt you, but what basis is there? What's the reason for a rate cut?
Because their money supply is shrinking at 8% per year.
Okay.
We're in danger. The housing market's slowing pretty significantly, particularly when we have long-term rates near 650, because then the 30-year goes over 7.
Yeah.
We've had 12 out of 13 recessions, post-World War II recessions, were caused by a housing decline, which then leads to a lot of layoffs. The only reason we haven't had one so far is that we never got into the boom to bust.
Yeah, that's a good
point.
We
had 4.5 million homes being built before the great financial crisis. We never really got much above, 1.7 million maybe. Now we're at 1.4, but if the Fed doesn't cut, then that's going to go to 1,800,000. Maybe we're okay because of tech boom offsetting it, but it's a little bit like the opposite of 2001, where we had a mild recession. Tech actually absolutely got smashed. Housing was pretty stable. Now we might have a mild recession if the Fed doesn't cut, where housing, goes sub 1.1 million, and tech offsets it, but we still have like zero growth or negative 0.5, which is not significant.
Hey, just explain, Jay, if you would, the money supply going down. Tell the audience about that little.
Yeah, so this is the master class. If you understand this, you'll be in the top 0.0001% of Fed watchers. But
that's you.
Yeah, so to keep rates artificially high at 4.33, because they're obviously high, right? Because the 10-year is right around them.
Yeah.
Could be 75 basis points below that at least. Well, actually 100 below that. And so, therefore, what they have to do is suck $500 billion a year out of the reserves that banks hold, because Fed funds is just the reserves
right
that banks are lending to each other. Now, conversely, just to tell you why you should look at the monetary base is the best way to do it, is that guess what? How fast that was growing when rates are at 0. It was growing at 70% over like a year and a half.
Right.
And that's what produced that 22% inflation. It went up to 70, and then they did reduce the money supply by about 10. So you got to that 60, 38, 22. Now we're at -8. Well, so that means we're going to have deflation eventually, and oil prices are down. Maybe you get a one-time tick up in tariffs related inflation. But that's one time. The Fed is just incompetent. So they don't know. They think that there'll be some psychological effect. They call it the expectations theory. Totally ridiculous. So they're misanalyzing this and putting us at risk of a recession. But there are 2 Republicans who are less Trump haters, less negative about tariffs. They're calling for a July cut. So there should be some sort of compromise and a cut in September and probably one in December.
So what you're really saying is if you suck $700 billion out of the U.S. economy on an annualized basis, there's less money to go around, ergo there's less spending, less GDP, that they're probably 1-to-1 correlated. Is that what you're saying, Jay?
Yes, and that's what I wrote my master's thesis at Wharton on, and it was highly, even then, it was highly statistically relevant, but now it's way more relevant because the Fed gyrates around the money supply so much Because before they would just be like a straight line, like kind of growing within a normal band. Like during the 70s, it was 10. Normally it would be 5 or 6. So you couldn't really tell because, when you do a regression, you need volatility. But now with the Powell Fed, where they're, moving the money supply all over the place, then you can see the statistical correlations. It's like 70% correlated inflation. It's really 100, but that's just what you can prove. So
Right.
very dangerous to grow the money supply to -8%.
Wow.
Okay.
Well, you heard it here first, ladies and gentlemen.
That's
Also,
huge.
Next time we have Jay on, we're going to talk about how wonderful it is that we're still phoning up homeowners to ask them what they think their house is worth, would rent for.
Yeah, right. So you're looking at cuts. So you're looking at a cut in September, one in December. I think there's only 4 meetings, and then they have obviously Jackson Hole left. So, but nothing ever happens there anyway. But so do you dare to give us a number though? I mean, you're looking at a 25 basis point cut, 50, and
no, they're going to go slow. I mean, that assumes, of course, the Fed chair doesn't get fired. But even if he got fired, the rest of the Federal Reserve is still there.
Yeah.
So this still holds even with Powell gone. So they'll do 2. They should do 3, and they're only going to be 25s. And look, that's okay. I mean, the economy is slowing, but it's not crashing. So that's why it's stupid for them not to have done it earlier in the year, because you just do 25, you're nowhere near neutral. So what's the problem? Okay, we're at, well, if you just shelter, we're at 2 already, but let's.
If you're talking about inflation rate, we're at 2% inflation.
Yeah, we're at say 2.7, 2.8. It's without correcting for anything. There's a lot of nonsense in there. Yeah. But so okay, cut it 25 and then wait, they're treating this like they are such precision pilots, they can land a 747 on a aircraft carrier. You can't do that. Right. You gotta be like, well, yeah, inflation's not 2, but it's also not 10.
Yeah.
It should be 2 to 3, not 2. The target should not be 2. So in any case, it's imperative that they cut rates. It's not going to be, it's still deflationary because we're still shrinking the money supply. We're not going to grow the money supply normally until we get much closer to 3. So they're going to keep leaning against the money supply, puts downward pressure on prices. And, we don't want a deflation because then that can breed people's, once prices start dropping, can create unintended consequences. So, and most importantly, even if it doesn't, because that's a little bit of like the flip side of the expectation theory of inflation. But the only way they're really going to drop is if we have actual recession, and it's entirely possible. I just looked up the data while we're talking. So housing starts have been muted since 2011. They've only averaged 1.2 million. Now, of course, they're really low for 4 or 5 years, or 7 or 8 years after the financial crisis. They crashed during the pandemic. They did get as high as 1.8 million in 22 before the Fed slammed on the brakes, and then they've been banging around 1.4. But the last print was 1.25, and our rule is below 1.1, you have a recession. We always have had a recession since World War II. So we're pretty close to a housing recession, maybe offset by tech, but that's a very dangerous place to be.
Yeah, definitely agree with that. So listen, guys, let's leave it there. Jay, you said it all. You always do when you come to Buy, Hold, Sell. We love having you on, and we definitely will have you back. Hopefully, we'll have you back before the first rate cut that you're predicting in September.
We'll have him on. We'll have him on that day. We'll give him the crown. He can have a scepter.
Yep, that's right. We'll definitely do that. We'll hold a parade for you. So that's awesome. So Jay, thank you so much for joining us on Buy, Hold, Sell.
Thanks, Todd. Great conversation. Appreciate you having me on.
What am I, chopped liver?
Well, on behalf of Jay Hatfield and Tobin Smith from transformativeresearch.com, and I am Todd Schoenberger. We'd like to thank everyone for joining us on Buy, Hold, Sell. This Friday on WealthWise, John Bollinger is going to be sitting down with Jeffrey Hirsch. Definitely want to watch that one.
Bollinger's still alive?
Yeah, you remember from the old FN days.
Oh yeah, I remember him from
Remember?
FN.
Yeah, Bill Griffith, he would sit there and do his Bollinger Bands, and yeah,
Bollinger
pretty
Bands.
wild
Yeah.
stuff. So it should be great. Definitely, if you're a Wall Street historian, you will definitely want to tune in for that one. But we want to thank everyone for joining us today, and we'll catch you next time. Take care. All right, we're out, guys. That was great.
Good. One quick comment is that
Excellent show.
I'm in danger of being fired by our CEO as our PR rep. Because I talk about the Fed, but I never mention our ETFs.
Yeah, I was gonna.
So next time we do, this was spontaneous, so it's fine. And I don't do it on any other channel, but it's always good to, actually mention our
Yeah,
ETFs.
well, Todd will put a slide in to this that shows the name of the ETF and the ticker symbol. And that will be in this, I mean, not the live version, but in the tape version.
Well, I enjoy doing it anyway, and I do it all the
Yeah.
time. Go on, Maria. It does me no good, but I enjoy doing it. So I appreciate you having me on.
Well, I definitely will let everybody know that, because and Toby's right. I mean,
Yeah.
we add in the backlinks, everything else also, and it's blasted out. So we
No, the
definitely will.
exposure, I mean, to be clear, the exposure is always good. It always generates a little bit of interest, but talking about the ETFs makes it a little bit more tangible, and then I don't get fired.
Okay.
Totally understand.
Well,
I
Well,
usually get
we'll have to
rehired
that.
as well, but
I was going to
get
say you get fired
yeah.
and then rehired.
Yeah. But I just occurred to me, like it's like I'm an author on a book tour, but I never talk about the book. Like, what good is that? You know? Thankfully, we have
analogy.
good returns, so we get inflows despite
Yeah.
my incompetence.
All right, brother.
Okay, great. Thanks for including me. I appreciate it.
I thank you, and thanks for doing it on short
Thanks,
notice.
Toby.
Really
Next time
appreciate
I will mention you. That's standard. Should always mention both people. I apologize, but thank you.
No, it's all good. It's all good. It's great. This was on. We tried everything. That was definitely different. It was awesome. So I appreciate it, and we'll definitely have you in again real soon.
Okay, perfect. Thanks. Bye-bye.
All right, Jay. Thank you. Take care now.
Bye.